morning. My name is Killian Charles. I'm President and CEO of Brunswick Exploration. We are the largest grassroots lithium exploration companies in the Americas. We are fully financed, and we are going to be launching one of the largest grassroots exploration campaigns globally.
Killian, lovely to have you on the show. Not might have spoken before, so I've been looking forward to this one actually, because we're one of the few companies that bucked the trend in 2022 and has continued to do so in 23 by growing your share price. Why don't we try and get some definitions out of those? So grassroots exploration, you're looking for untested pegmatites. You've got a lot of them. So what's the model? What are you trying to do initially?
Well, actually, that's a fantastic question. You know, historically, Canada has never seen systematic lithium exploration. That's not to say it hasn't seen lithium exploration, just not in a systematic approach. They've been accidents, happy accidents, but they were always accidents. People were looking for copper, gold, zinc, nickel. That's what Canada was known for. And as you saw the quote unquote battery revolution, the green economy stepping into, its full footprint that we're now seeing all over the world, it first quote unquote developed in Australia. If I have, an Australian deposit and I'm refining it in China, it makes a lot more sense to find it there than in Canada. So now that we've developed the Australian market a fair amount, people are now turning around to the Americas and say, well, what's the potential there? And so that's what we went ahead and did. We saw that there was an opportunity. We saw that no one was being systematic. No one was going back to these old pegmatites that had been found in the 50s, the 60s, the 70s, and seeing if they had lithium potential. And so we decided that, you know what? Let's go ahead and stake everything we can in the Maritimes, in Atlantic Canada. Then we did the same thing in Quebec, and then we did the same thing in Ontario. Then we did the same thing in Manitoba, and then we did the same thing in Saskatchewan, always holding to key guidelines, key criteria that are, important for us. One of those is we got to be close to infrastructure. This is still a bulk commodity. I like to joke that diamonds leave in a briefcase. You can take a bricks armored truck when it comes to gold. But when it comes to bulk commodities like lithium, like copper, like nickel, like zinc, I need infrastructure. So we made sure that all our properties, all our pegmatites were close to infrastructure. We made sure that, they were, again, this is a bulk commodity. We want to make sure they're big assets. So we only looked for pegmatites, as you mentioned, these hard rock deposits that were at least 500 meters in strike length. Large targets that if we do find lithium in there, again, they've never been explored for lithium, they're virgin, untested, that they would have a strong chance of being mines. Ultimately, I think there's a disconnect in terms of the industry. We're out here looking for mines, right? That's the objective.
But what I want to kind of get to with you is work out how you make money. How you define success, because going out and staking literally hundreds of these pegmatites, and you've got some criteria by which in terms of 500 meters of length in your infrastructure, I get it. But for you, and it really is grassroots. We're talking about staking here, right? So have you done any drilling? I don't think you have you?
Yeah, exactly. So, what I just described, that systematic approach, that's just part one of a three-phased approach. So phase one is we go out, stake, identify, do all that work, and then we move into phase two.
But when does phase one finish? I really do want to get into this because I like the model. So phase one is how much more staking do you need to do? Have you got enough yet?
So phase one will never stop. As long as I identify targets, I will continue adding them to the portfolio, because as I move into phase two, I'm going to filter out these targets. So, I start with a pool of 500 plus targets. I'm going to say, okay, well, of that, 40, 50, 60, 70, 80, 90% don't contain lithium. I'm just going to let them go. That's fine. They're not what we're looking for. No one's ever gone to see them. We've fixed that mistake. And now we're in a position where, okay, let's go look at what else is out there. Let's go see what the other opportunities. So let's continue adding to the portfolio. We drop one, that's fine. We're adding one behind it. And that's when we move into phase two. As I mentioned, 3 phases. So phase one, it's that systematic approach of adding to the portfolio. and then we go boots on the ground. That's when we're filtering. That's when we're out there saying yay or nay at all these targets across our portfolio, whether it be it by truck, road, helicopter. We get to that target, we get to that pegmatite. A geologist lands there, says, no, this one does not contain lithium. Discard it. No, this one contains lithium. Let's keep it. And that's when we move into phase 3. That's when we start drilling. That's when we move into more advanced exploration work. And we've already started drilling, to your point. We've already drilled assets in Quebec at our Anatakau project where, exactly that point. We saw property we liked. We signed an option agreement with a company called Osisko Development. We, identified the presence of lithium. We turned around and drilled it. We're doing the same thing in Hearst, where we just started drilling last week. We made the announcement last week. So, again, identified a property that contained lithium. In this case, we did an option agreement on it, and now we're in the process of drilling it. And it's a process that I can repeat ad nauseum. The opportunity is there because we've never done this in Canada.
Right. Okay. So systematic approach. Let's say, your number that you gave, 500 of these. You disregard 90% of them. You're still up with 25, right? That's a lot of targets to be going for. Can I understand the money side of things? Because you've raised money, small amounts of money, during different points during last year and also recently, this year, last month. So you're going up, and not massive chunks, not more than you needed, but enough to kind of keep things moving. So how much have you spent on phase 1 so far?
So phase 1, the fun thing about this is that it's so cost efficient, right? We're doing programs that are not overly complicated. My number one cost in the company is actually helicopter time. That's where I end up spending most of my capital. So I don't need to go out and raise enormous amounts of capital. I can be efficient. I can be focused in how I deploy that capital. So look, don't get me wrong. We're very well financed. Over the last, say, year, we've raised just shy of $19 million, which is a good amount of money to go ahead and do exploration. We're more than fully financed for all our exploration program for the year. We're probably going to finish the year with another $5 million still on the books. So very, very happy where we stand. The company's in strong financial health, but is also in a strong position to go ahead and execute on its plan of making discoveries, finding mines. That's real value creation in mining.
It is. Not many people make discoveries. Certainly a lot less actually become mines, certainly economic ones. So phase 1, understood, not expensive, but there's a process of, getting whether it's 50%, 90% discarded. Let's use 90% thing. That means 25 targets, which you said do have lithium. Now we've got to go through the process, like every other exploration company, of working at the potential economics of that. So you're going to be looking at a small drill program, working out grade and all of those wonderful things. And then you're going to have to go through either a discarding process or what? Joint venture with people? Because again, you could potentially be raising a ton of money here. So I'm trying to understand, again, how do you finance yourself going forward if, say, every one of these 25 remaining pegmatites actually has potential to be economic? You can't fund that yourself. So again, what's the plan for the game going forward?
Well, first of all, that's a bit of a Hollywood problem. If I have 25 viable, strong, viable,
you still need a solution.
I'm going to be very happy with that problem, first of all. But no, you're absolutely right. And it comes out with the second scenario and why Brunswick's a little bit different from other companies, right? When I think about Brunswick, it's that scope and scale and that opportunity that we have here where, for a lot of investors, it can be complicated. Well, is this project, under company A better than this project under company B? And then let alone about company C and D. Well, here we have a company, Brunswick Exploration, that has all of that with the project, and we can internally strategize and, rationalize where we want to spend that capital. Of course, some of them will be sold off and that we can pour the money back into some of our projects. Some of them will be brought into JV partnerships. Obviously, there's a lot of interest in the type of lithium deposits we're looking for, hard rock deposits. You have, Albemarle that has been rebuffed 3 times for Lionstown Resource in Australia. There is a lot of fertile activity in the space, M&A activity in the space. But, setting that aside, there's a lot of potential partners, and that will allow us to focus on the best of the best, cream of the crop, in terms of our internal portfolio. And there can be, some outside sources of financing, but between selling and JVs and, different partnerships, we'll be in a position where, it'll be a little bit more self-sustainable, even by hopefully the end of this year or early next year.
Okay, so I want to be clear. So you're not a prospect generator trying to create products for other people to run away with. There is that element to your portfolio approach, or hopefully a portfolio approach, but ultimately you want to go on and deliver some of these assets or the most prospective projects yourself. And I assume with the aid of a Cisco, you feel that you can do that financially.
So, you're kind of pretty getting really close to how we see it, right? We're not huge believers in project generator companies, especially as on a public basis. As a private basis, I think it makes a lot of sense. On a public basis, it can be a little bit tough to get value for investors. And we are investors of our own company. We want to extract as much value as possible for our investors, which includes ourselves. And so when we look at these assets, we do want to be able in a position to focus on the top tier ones in our portfolio, whichever one they may end up being, and push them to the logical scenario where we, whether it's an outright sell the company, we try to build it. All opportunities are open to us. Between myself, management team, the board, we have a lot of experience. We have a lot of strong institutional backers, corporate backers, personal backers as well. So, we're quite confident that we have the tools necessary to advance these assets to, the logical endpoint for Brunswick Exploration.
Right. And so, again, tell me about how you potentially could package up the stuff that you don't want, or not that you don't want, that you would monetize, right? Because in a kind of high lithium price environment, like, up until October last year, where prices were just going nuts, and obviously it's down to about a kind of quarter of that now, is I imagine everyone wanted lithium projects, and those companies could get funding to go after and identify lithium projects, which you've got.
Yeah,
potentially got, right? In this environment now, do you sort of see needing to package up the best of the rest in a different way than you would have at the end of last year to kind of make them attractive? Because these companies won't be coming to the table necessarily with a ton of cash, a ton of shares maybe, and you've got to take a view on that. So how have things changed in the last 6 months for you with regards to that bit of the strategy?
Actually, and you bring up a very interesting point. We're not actually looking to sell a lot of this portfolio to other junior companies. The way we've approached this is, if I look, and I invite anyone to do the same example, if I look at the major lithium producers globally, whether it's Albemarle, Livent, Alchem, Lionstown, doesn't make a difference. Pick one. They all have the same issue. They have no growth on their portfolio. They all say the exact same thing to their investors. We're going to grow the company. We're going to find new asset. The issue is that they have no exploration. And all these companies have been so focused over the last 5-10 years, and rightfully so, but they've been so focused on construction and development and execution that they had no time to think about the future. So Brunswick Exploration's portfolio is of major interest to a lot of the established players in the space. If I'm an established producer of lithium, or I wish to grow into the space, my portfolio of asset becomes very interesting, because now all of a sudden I could potentially gain a lot of grassroots project that I can selectively grow. So, by way of example, again, and I'm not saying it's Albemarle or anybody else out there, but it's just an easy one out there. Albemarle wants to get grassroots projects. Well, we have the portfolio that could be of interest to them. And so that provides us a lot of flexibility with how we want to approach that. Maybe some projects will be sold to other junior companies. Could be a potential scenario, but we remain open to all portions of the market. We may need to make discoveries across the board. And so it's going to be a large variety of potential players out there. Maybe I decide I want to package all of my Ontario portfolio to a producer. And, they'll pay a good amount of money to just have a foothold around a few advanced assets and maybe a few grassroots assets. And now they've got a development pipeline, which you don't have in lithium. No companies have a good exploration/development pipeline like you have in gold companies, like you have in copper companies.
Yeah, well, tell me how it works in lithium, because again, that sort of intrigues me. Where if I do look at other commodities, typically if you gold, the majors or the mid tiers, they're looking to clearly they're depleting resources, and they do have a nasty habit of overpaying, during really positive markets for acquisitions, and they're looking for to improve their reserve position, not just the resource position, but the reserve position. So for lithium, you're saying, well, actually, no, these guys, lithium producers, are happy with kind of greenfields or early stage exploration projects, or are you saying at the point at which you would transact in whatever that looks like with the kind of producer side of this conversation? You will have created enough data to give them comfort that this thing could be quick into production, because there's no point in having something that takes 10 years to get into production. That doesn't fill their kind of immediate needs, I wouldn't imagine. So what are those sorts of conversations you imagine look like, sound like? What would you need to, what confidence would you need to give them about the assets that they're looking at?
Yeah, so you have to realize that the lithium market is immature. We've been mining copper for, pretty much the Bronze Age by definition. Same thing for gold. But, lithium is a very new industry, and we've never really been faced with it in the mining industry in general, where we have to go from zero to hero, just, produce a lot of lithium and have a lot of players in the space. So from that perspective, tech's been around for generations. But a lot of the larger or the new large lithium companies have only been in the space for 10, 15 years and are often focused on a singular asset. So for them, if I take any major company out there in any other commodity, I will have, assets that are obviously in production, the next slate of mines, then the ones behind that one, maybe they acquire a new project to fill in, in that portion. And then a variety of assets at, earlier stages, whatever, pre-resource. Some of them have resource, some of them have economic studies, some of them have reserves. There's just, it's a mixed grab bag as the company evolves all of these different assets. On the lithium side, I absolutely don't have that. I invite anyone to go look at the portfolio of many lithium producing companies, and they will see that they barely have, the next set of assets that they want to develop. And then it's blackness beyond that. There's just no asset inside their portfolio at various stages of development. And so a lot of the lithium producers over the coming few years will look to burnish that portfolio, come in, add assets into it. And what Brunswick has done, it has consolidated grassroots exploration. So say I'm a company in the lithium space and I want to start acquiring grassroots assets. There's a few, not to say that we're the only one, there's a few other companies you can talk to, but by far the largest one in this portion of the playground is Brunswick Exploration. And so we dominate the industry when it comes to grassroots exploration. And so, our conversations with whatever strategic partners we decide over the next few years, are going to be very interesting because they need these assets. We need more lithium. Even at this point in time, if I gave, every one of your listeners $1 billion and I said, go build me copper mines, no one would have any issue spending that $1 billion. if I gave everyone listener and say, here's $1 billion now, go spend it and build lithium assets, they would struggle. They would absolutely struggle to put into production lithium assets because eventually we just don't know where they are. We have not found enough lithium hard rock assets globally. And that's what Brunswick seeks to do, to fill in that gap.
Well, I'd agree with you on a couple of things you said there. You've got a great valuation for the big main chunk of the story, which you came to market with, which is the greenfields component, where you're kind of staking a lot of ground and a big portfolio. The valuation is superb for that. And I guess some of the audience is saying, well, actually, my expectation of them is that they're going to do something with these assets, even if it's a sale or even if it's to run through the kind of development phases yourselves. That's great. The hard rock component, yes, definitely rarest hen's teeth in Canada. But there have been, over the past 3 years, a lot of conversations from the DLE folk and the brine folk. It's extraordinary, some of the claims coming from some of them. So it's lithium is something that people are aware of, but you've consciously said, no, hard rock is where we want to play. Canada, sort of mid to East Coast is where we want to play, and it's kind of fairly stretched out. So can I come back to the phase 3 bit, which is how quickly do you get to the next bit of the value curve, which is what do you start to do with some of these assets? You kind of explained one of them earlier, but where's the value coming from over the next kind of year, 2 years, as far as you're concerned?
Yeah, absolutely. So I'll go back, our view on the DLE, the salars, the brines. We've been mining hard rock deposits for 100 years. This was the first source of lithium. It's going to be the source of lithium for generation to come. These other technologies may come and have an impact, but hard rock is going to always be present. There's no doubt about it. So that's why we focused on hard rock mining. It's established. People know how to mine it. People know how to extract the lithium. That's what we like to focus on. Now, to your other point there, in terms of how we see the next growth in our valuation, it's actually really simple. We spent a bit of time talking about, well, what are you going to be doing with the tier 2 or tier 3 assets? I think that sort of answers the question in a different fashion. We're looking for tier 1 assets, right? Every company on the junior side will spin the exact same story and say, well, we're hoping that we have a world-class asset. They all want to say that because that's the best thing that any geologist can do, is find a world-class asset. Now, sadly, most companies will fail to find a world-class asset because they are, unsurprisingly, quite rare. What we've built at Brunswick is we've built a portfolio that is designed to give us the maximum amount of chances to find a world-class portfolio. That's not to say that we will. That's not to say another company won't either. We just have the most chances of any company out there. It almost becomes a numbers game. If every pegmatite has a chance of, a 1 in 1,000 chance of actually finding something, and every company has, one pegmatite, well, that gives them a 1 in 1,000 chance of finding the next world-class asset. In Brunswick, as we mentioned right all the way at the beginning, we have 500 more. So that gives us, 50% chance. There's a heck of a lot better odds of finding world-class assets. That's what we're ultimately looking for. We have a variety of assets in our portfolio that we believe already have the potential of delivering on that claim, where we hope that the work that we're going to do this year between prospecting and drilling is going to unlock that next wave of value.
So how quickly do you, okay, you got 500, right? We'll stick with that number, 500. Can you prioritize them in terms of most likely down to unlikely? Because otherwise, if you go the systematic approach and say, I'll start at number 1 and I'll work my way to number 500, that could take a long time, burn through a chunk of cash, and time is money as well. So how have you prioritized those in terms of getting to the good stuff first?
So, for us, and this is an excellent question. For us, it's been the first step is at least filtering, right? So, my team in a matter of hours knows whether a pegmatite is going to be barren or not. So that allows them to rapidly eliminate targets. All of our pegmatites outcrop, as I mentioned, they have to have a strike length of 500 meters at surface. That means we can see them, we can walk them, we can know whether they contain lithium or not. So that exercise is done quickly. The next exercise is, all right, now let's see if it has size potential. Doesn't take 30,000 meters to do that exercise. With 1,000 to 5,000 meter program targeted, with large step outs. Again, we know it's present at surface over 500 meters. So it allows us to build and get an idea quite rapidly. So by the end,
how deep is that? If that's 1,000 meters, how many holes are we talking about?
It could be anywhere from 10 to 20 holes, going down to a depth of 100 to 200 meters. Again, these outcrop at surface, they're going to be open cast mine, open pit mines. Maximum depth's going to be 300 meters. If I have and I'll use a very simple example, a pegmatite that's 5 meters wide, a pegmatite that's 50 meters wide, right? Obviously, the pegmatite that's 50 meters wide is of major economic interest. That's going to be a mine. That's going to be a world-class discovery. I'll know it within the first 10 holes as to what I'm drilling, actually, if it's going to be 50 meters wide. The rest, I can maybe try to squeak something out and get to that end objective. Sure. Maybe I have more than one pegmatite in the area. If it's 5 meters wide, maybe I have, 4, 5, 6, and I get to that critical mass that I'm looking for in terms of tons and grades. But if I put my first few holes in it and I drill 50-meter widths, good. I know I've made a discovery. And that's
is this a mixture of RC and diamond drilling, or what are you thinking about? How are you planning?
Diamond drilling. RC drilling is best used for infill drilling when you already know the general shape, size of your pegmatite. As we're doing exploration, we gain more geological information from diamond drilling, so we're going to focus on that. But I'm going to go back to Anaticow drilling. We put out a first blush, if you will, of the drilling we did over there. And already we intercepted 30 meters of spodumene-bearing pegmatites. Perfect.
What grade? Have you got grades yet?
No grade yet. What we know is that it contains spodumene up to 20% spodumene. And we know it's over 30 meters. We're going to get the grade in the next couple of weeks to months here. And then we'll go back. But knowing that I have 30 meters of lithium-bearing pegmatites, that's already a good sign. I know that this is going to be big enough to be interesting. It's a bulk commodity. People forget. It's not like gold. 2, 3, 4, 5 meters. That's not really interesting when it comes to lithium. I want to make sure I find, say, at the minimum 25 to 30 million ton deposits. So, we started a bit of drilling. We know it's surface expression. We take out our calculators. We're like, all right, this one has the potential. This one, it's going to require a lot of work, or it's going to require us finding another one in the vicinity to hit that 20 to 30 million ton threshold. All right, so let's focus on the first one where we got that big width. That's how we really look at it. That's how we can be efficient. Again, because we have such a large portfolio, we can prioritize internally what we want to work on. Right. And that's
exactly. But that's what it sounds like to me. It sounds like you're not going to be sort of smashing through 500, backpack drilling, was that keep the blades rotating, because I'll be back in a minute. You're going to say there's probably 20 or 30 which look like we should go after those first, because again, I know you've got a bunch of money in the on the balance sheet at the moment and in the bank at the moment, but you've got to be smart with how you allocate that capital this year. So I just want to be clear that you're not going to be like throwing lots of money at all 500 this year. You're trying to hone in on the economics now.
Yes.
Is that right?
Absolutely.
Okay.
That's absolutely what we're going to be doing. We're going to take that 500, bring it down to a manageable number. And then from there, we're going to start to say, okay, do we keep target 1? Do we for target 2 versus target 3? And that's a much more manageable number for our company, much more manageable number from a cash position. It's not going to require, $100 million. No. It's going to be much more stable. Again, exactly the type of program we did at Manitoba, 1 to 5,000 meters. We do that, a couple of times. This year, we're going to be drilling just in the first half, 3 different targets. So we finished one at Manitoba. We're doing our second one in Hurston, Ontario. Then we're going to be doing our third one in Saskatchewan, later this summer. And then from the filtering that we're going to do, that phase 2 program that we're going to do this summer, we're probably going to end up with a new range of targets in the second half of this year. And we'll say, okay, well now, does this have the potential of being better than something we previously drilled? If so, that's where we're going to spend our money. Oh no, actually something we drilled before, let's say in Saskatchewan, is much better than everything else we've identified. Let's deploy our capital there. We have that flexibility. That's what differentiates us from a lot of other teams and a lot of other companies. We can be flexible in terms of how we approach exploration, and we can always keep it at a manageable position.
Okay, so the flexibility comes from the amount of the optionality that you had across the staking, the vast staking. So, and the reason I'm asking this is because we had a few questions sent in, which at least I think some people out there, and I know you've been very careful to dismiss this. People are going, 500, they'll all be hits. This is going to be a multi-billion-dollar company in the next year. You're going through a systematic approach. You're honing in on the stuff which you think has the most likelihood, the most chance, and you're not wasting capital on stuff which is a little bit, let's say less likely. Get it. So with regards to, and I think you've also said how much money you've got and how much money you expect to have at the end of this year. So that kind of helps us with the kind of burn rate questions which have been sent in. So what are the things that you think you need to deliver this year to, I guess, continue this surge? I would say surge is the right word. Your share price shot up in January. People got excited about something or other, but you've kind of got to keep that momentum going and that communication outflowing. What are the things that you think will be important for you to deliver this year? And what do you at board level think you should have been able to deliver by the end of this year? So what are those sort of catalysts, I guess?
It's always going to be one drill hole, right? So again, for us, what we have done is build the foundation, right? That's what we have spent the last 18 months, is building the strongest possible foundation for Brunswick Exploration with our portfolio of assets. Now that we move into that drilling phase, people say, 500, and, if they hit all 500, it'll be a multi-billion-dollar company. No. I just need to hit on one. If I hit one hole and it's 50, 100 meters of mineralized pegmatite, then there's my billion-dollar valuation. I don't need to, break my back over anything else. I just need one, and we're very conscious of that. And that's why we've transitioned into that third phase. Now we're drilling our targets. Now we're pushing to, do that advanced exploration. What is the scale and size of it? And one drill hole in a pegmatite, I know instantly. If I drill it and I come back with 50 meters or 100 meters of core, it's going to be better than 98% of all the other projects out there in Canada or even across the entire planet, and I'm off to the races.
But do you think there's a little bit of you think, crikey, have I made a rod from my own back here? Because the process that you've been through publicly is a process which I think a lot of explorers go through pre-IPO, i.e. they're looking at lots and lots of projects, they're dismissing lots and lots of projects before they kind of land on the 2 or 3, well, sometimes one asset which they go to market with. You've got people super excited about the process without necessarily having delivered anything yet. So you've got an amazing market cap, you've got an amazing share price. So the valuation is super. Now you're going to have to go and do some stuff which continues to excite and thrill the market. So there's a little bit of you just think, crikey, maybe we need to, I don't know, just rein in expectations a little bit until we hit that one hole. You set yourself up for success. But do you know what I mean?
Yeah, and you're right. If lithium was comparable to other industries, and so I'll go back to your point, right? Where I'm a private company. Let's say I'm a private company in the gold space, and I'll evaluate a variety of projects. Let's say in Canada, and finally I'll pick the 2 or 3 that I'd like, and that's what I'm going to focus on. And IPO, raise a bit of dough, and away I go. When it comes to lithium, that's not the case. As I said right back at the beginning of our conversation, we have not done exploration for lithium in Canada. Every lithium discovery has been an accident. So from that basis, all of my targets, or the majority of my targets, I do have many that contain lithium, but the majority of my targets are untested. All right. So this is something that is very, very different from other companies out in other commodities. So I don't know where it's going to be. And that's where, even from that perspective of being private, it wouldn't have made any difference. Right now, what we wanted to demonstrate to the market is, hey, this is our strategy. Let's go ahead and raise the capital to continue acquiring and to continue being the largest, grassroots exploration company in the Americas. Now we're pivoting into that next phase of drilling. Again, I remind you, only 2 weeks ago, we started providing a blush of some of these results. 30 meters of spodumene-bearing pegmatite is a heck of a lot bigger than a lot of other results that have been put out to the market. And that's just one inside our overall portfolio. Again, we are now drilling another one of our targets. We are going to be drilling again in Saskatchewan later this year. And we are going to be adding new targets to the portfolio that require drilling during this summer as we move and filter out and discover which ones do and do not contain lithium. So that growth is happening right now. We are delivering to the market results, and we will continue to deliver to the market results over the foreseeable 2 to 3 years, to be quite honest. So no, actually, I completely disagree. The valuation for Brunswick, when viewed at the potential of what we can discover, and I think it's important to remember that, if we find something, Brunswick's going to be very cheap, even at the current valuation. The assets that we're looking for trade anywhere from $500 million to $2 billion in value. And so I find one in my large portfolio, and then it's game over at that point in time, right? I can more than amply justify that I'm quite undervalued. And so it's that opportunity/risk profile that's really working well in Brunswick's favor. There is a lot of opportunity. There is some risk, but the upside is quite large. Again, we have the capital, so it's not like people are expecting us to come to market right away and, back up against the wall. No, none of that. We can go ahead and execute on our plans.
Great. Well, it's all risk until it isn't, right? So it's about the process you go through to de-risk the opportunities, right? So to that point, your expectation is you're not going to come back to market in terms of fundraising this year. You're going to end the year with circa 5 million, I think you indicated. And then really a case of evaluating what's happened this year to work out how you move forward. I think that's fairly common sense stuff. I imagine you're going to tell me that.
No, yeah. Look, obviously, if I make a discovery, we'll reevaluate. If I drive 50, 100 meters, then I'll come back and rethink about my, if I want to come back to the market or not. But you have to keep coming back to the fact that this is an immature industry. 50 years, 100 years ago, people were finding gold mines and copper mines all over the world, right? We were, every year we'd be making a major discovery in the space. And I'm a strong believer that, Patriot battery metals, that type of deposit, there's like 4 or 5 more to be found in Canada, easily. We've barely started searching. It's year 2. If you want to stretch the definition, I'll say year 3 of systematic lithium exploration in Canada. We are such at an early part of this industry that there's a number of world-class discoveries just waiting to be found, waiting for somebody to go walk on them. And Brunswick is best positioned to have a geo walk on them. That's the opportunity there. It's not like in gold. It's not like in copper, where we've done grassroots exploration for generations and thousands of years. We haven't done that in lithium. This is a new industry where, especially in Canada, we have not made discoveries. Look to Australia from 2010 to 2020, billions of dollars of value have been created. Multiple world-class assets have been discovered, not just one, but easily half a dozen. And Canada has the same, if not more potential than Australia. If you assume that PMET is one of the 6 that have been found in Australia, that means there's 5 more easily to be found in Canada. I'm a big believer in that position. We are just starting when it comes to exploration. And I don't mean this at Brunswick. I mean this as a whole industry. And Brunswick is best positioned to capture that value growth.
Right. Okay. And I hear what you're saying. I spoke to another Canadian hard rock lithium company today. I think they echo your sentiment. It's new in Canada. We have spoken previously to some DLE guys. Again, big claims, but I think technically, they have their own challenges. Hard rock, a little bit simpler to understand. So there's lots of pluses to your story. With regards to how you position the company, though, I'm sort of intrigued by that, because if you you've seen a lot of moves in the marketplace with regards to battery companies, OEMs kind of moving upstream, trying to secure supply, but that's typically been with development companies. Right, so you're not that. You have to go through quite a few phases. I know from your presentation that you're very confident about the supply and demand fundamentals getting stronger for the space, driven by the battery thematic, obviously for EVs. But at some point, you're going to have to kind of insert yourself into that kind of ecosystem. And how are you seeing that playing out in Canada and that whole kind of North American ecosystem, critical minerals system that's being talked about more and more these days?
Actually, again, if I look to North America, and I will include Europe in this, you mentioned gigafactories. There's gigafactories being built in North America. There's gigafactories being built in the EU and further abroad. But all of these all have the same fundamental issues. They are going to require a lot of lithium, and the same way that Australia supplied China, Canada is going to be the prime source to supply these countries. If China, ESG never fully mattered what the ultimate source of lithium comes from, but it's obviously a very sensitive issue in North America. It's a very sensitive issue in Europe, and so saying that, hey, Canada can be the prime suppliers for 2 of the global areas of the world of battery production, that puts a lot of eyeballs on Canada. I think it's quite telling that, again, using the example of, let's say, Albemarle, who is largely a solar producer out of South America, they're not buying more solars. They're buying a hard rock producer in Australia. And, it's great. All these gigafactories and battery manufacturers, they're signing deals with the development companies. That's fine. But there's only, a dozen of them that they can sign deals. And if they want to sign more deals, what are they going to do? They need to find new assets. You need to have companies finding new assets. And that's something you don't have in other commodities. Again, it's that immaturity of the lithium industry where, it doesn't matter. I have copper assets that I can build in the future. I have gold assets. I have zinc assets that I can build. And it's a question of just building the best one out there. On the lithium side, it's not even a question of building the best one out there. It's like, we need to build them all, and then we need to make sure that we find a lot more, because we need a lot more. And so that's where, you look on any horizon, 2, 3, 5, 10 years, Brunswick Exploration is best positioned to benefit 3 years from now, 5 years from now, 10 years from now, by having a portfolio, by having a variety of assets, some of them that we will keep for ourselves, that we will advance through various development stage to sell or to build ourselves in the future, whatever the situation may be that benefits the most our shareholders. Some of them will be sold in 1, 2, 3 years. Again, we can pull on many levers as necessary. And it keeps coming back. It's an immature industry. It's a different industry from all these other commodities. And it's going to be faced with a lot of pressure, a lot of demand pressure. We are still only starting. Best example, look in the US. They're building 4 spodumene refineries, right? Piedmont wants to build one. Livent is upgrading its spodumene refinery. Tesla is building in Texas a monster. It's a beast of a spodumene refinery plant that's going to require a lot of feed. That's why you had rumors that they were going to buy Sigma out in Brazil. This is a trend that's not going away, irrespective of what the market is doing on a short-term spot basis in the lithium market. Every producer, every buyer is looking, okay, great. Whether I'm in supply or balance this year, I'm not even worried about this year. As a supplier and as a battery manufacturer, I'm worried about 2028. I'm worried about 2030, let alone 2035, when all of a sudden these laws banning the construction or production of gas or ICE engines stops. So, they are very much looking to the future, and it's a future that Brunswick ties very nicely into.
Okay. Well, I'm just conscious of time. Thank you for your time. 2 quick last questions, which have been sent in. Old Hockstock 101 gets a name check for this one. Name change, and also question around ASX listing. What are the updates on those?
Yeah,
if there are things you can talk about now.
Something we are considering. We just got our OTC QB listing down in the US. We are We're looking at various opportunities to continue growing and improving shareholder opportunities to purchase the Brunswick Exploration stock. So, obviously ASX has had a lot of success when it comes to lithium. There's obviously a lot of Australian-based lithium companies in Canada. In Quebec particularly, we see that as a product that could dovetail nicely with existing shareholders of those companies down there. It's something we're exploring. In terms of name change, again, we're always exploring various opportunity, branding, all of these types of things. So it's something that may or may not happen, but we're trying to make sure that we always deliver the best return for our investors, and we take those decisions to ensure that we deliver the best return to our investors, whether it's a change, a new listing, anything that can help grow the company.